Putin's oil empire began to crumble. The Moscow stock market is in a freefall. US moves to block China and India from buying Russian oil. Even Vladimir Putin admits these sanctions will strike Russian economy hard. What is known about the current impact of US sanctions on Russia, and what would this mean for Putin's wartime economy? Shares of Russia's two largest oil companies, Rosneft and Lukoil, fell on Thursday following US announcement of sweeping new sanctions aimed at curbing Moscow's energy revenues. According to media outlets, the penalties unveiled on October 22nd target Russia's dominant oil exporters and their ability to conduct transactions in dollars, ship crude oil via Western insurers, or raise financial through global markets. The move marks US most aggressive effort yet to cut off Kremlin's energy income since the invasion of Ukraine. The Moscow stock market reacted immediately. The MOEX Russia index fell as much as 3.6% in early trading on October 23rd. Shares of Rosneft sank 3.78%, while Lukoil plunged 5.85%. Market summaries published by Financial Context showed the MOEX index down 3.6%, echoing figures from Moscow Times, and highlighted that the sell-off in Russian oil equities contrasted with the gains among US and European energy firms that may benefit from rising global crude prices. Russian dictator Vladimir Putin publicly said that these sanctions were serious ones, but dismissed the US move as futile, warning that Moscow would not bow to pressure. Nevertheless, investors sold off shares of other energy-linked companies, including Gazprom, Neft, Transneft, reflecting a wider unease about secondary sanctions that could target shipping, banking, and insurance support for Russian crude oil. Separate Reuters reporting shows the pressures already reaching Russia's export markets. Chinese state oil firms have paused new seaborne purchases of Russian crude, while Indian refineries are reportedly reviewing contracts and may sharply cut imports to avoid breaching US sanctions. This shift could reduce Russia's oil export volumes and force deeper price discounts to maintain flows. While the sanctions have rattled markets, analysts say their ultimate impact will depend on enforcement and whether non-Western buyers like China, India, Turkey continue to trade in defiance of US rules. Russian dictator Vladimir Putin still dismissed new US sanctions targeting the country's top oil producers as politically motivated and vowed that Russia will never bow to such pressure. Speaking in Moscow on Thursday, Putin called the sanctions an unfriendly act, but insisted they would not have significant effect. Quote, "This is, of course, an attempt to put pressure on Russia, but no self-respecting country and no self-respecting people ever decides anything under pressure." Putin also warns that attempts to damage Russia's oil trade could backfire on the global market, arguing that any large-scale disruption in Russian export would drive up energy prices. Despite dismissing the sanctions' impact, Putin used the occasion to criticize Washington for escalating both economic and military pressure on Russia. He accused the US of undermining global stability and framed the measures as a part of broader strategy to weaken Moscow. Quote, "The dialogue always better than confrontation, better than disputes or even war," Putin said, reiterating that Russia remains open to talks but will defend its interests by all means. Putin's defiant tone underscores Kremlin's effort to project resilience, even as new sanctions threaten to further isolate Russia's energy industry from global markets. Meanwhile, US President Donald Trump reached a breaking point with Vladimir Putin over the Kremlin's continuing attacks on Ukraine, prompting White House to approve a new round of US sanctions against Russia's largest oil companies. The Wall Street Journal reported this week. According to the journal, Trump's decision followed months of frustration with Moscow's refusal to engage seriously in peace negotiations and repeated Russian attacks on Ukraine. The president, who had long insisted that he could personally broker an end to the war, ultimately concluded that Putin was dragging him along, according to sources. In a pivotal Oval Office meeting earlier this month, Trump's national security team presented him with 3 options for punishing Russia. Journal reported a severe option brought sanctions on Russia's entire industrial base and key officials close to Putin. A middle option targeting the energy sector like Rosneft and Lukoil, and limited option focused on narrower restrictions designed primarily as a warning. Trump chose the middle course, reasoning that a direct hit on Russia's energy industry would send a strong signal without completely closing the door to future negotiations with the Kremlin. Advisors told journals that Trump had resisted harsher sanctions for months, believing personal diplomacy with Putin might yield a breakthrough. But his patience evaporated after fresh Russian strikes on Ukrainian infrastructure, including schools and residential areas, just days after he cancelled a summit with Putin. Enough was enough, one official was quoted as saying he felt Putin wasn't serious about peace and Russia was trying to play him. Wall Street Journal described the sanctions as a turning point in the administration's strategy, a shift from negotiation to consider escalation. By hitting energy sector, Russia's wartime revenue, Trump sought to pressure Putin while preserving room for diplomacy. The president avoided most extreme measures on the table, including full banking sanctions and direct restrictions on Russian officials' assets to keep leverage for potential talks, the journal said. Senior administration officials told Wall Street Journal that sanctions were designed as an economic game changer, but not a declaration of total economic war. He still wants a deal, one aide said, but he wants to make clear that this time there will be consequences. Wall Street Journal reported that sanctions are expected to have sweeping implications for global energy markets, given that Russia remains one of the world's largest oil exporters. Officials say the success of the measures will depend on enforcement and response of key actors like China, India, and Turkey. Analysts cited by the journal said new sanctions could deepen Russia's economic isolation if strictly enforced, but warns that Moscow may seek to evade them through shadow fleets and non-Western financial channels. The decision marks one of Trump's most significant policy shifts towards Moscow since returning to the White House. According to the Wall Street Journal, aides described the move as both strategic and personal, the culmination of months of frustration that tested Trump's belief in his ability to negotiate directly with Putin. Quote, Trump wanted to give diplomacy our chance, but this was the moment he realized Putin wasn't interested in peace, he was stalling. Meanwhile, European Union has implemented its 19th sanctions package against Russia, intensifying economic pressure on Moscow in response to its military actions in Ukraine. This comprehensive set of measures aims to disrupt key sectors of Russia's economy: energy, finance, and military industries. New sanctions encompass a phased ban of Russian liquefied natural gas imports, set to be fully implemented 2027. Additionally, EU has imposed restrictions on several Russian banks, financial institutions, including those operating in third countries. Notably, the package targets cryptocurrency platforms and vessels involved in previous sanctions, expanding EU efforts to clamp down on Russian economic activities. Furthermore, EU has introduced measures against Russian special economic zones linked to the war, aiming to hinder Russia's ability to generate revenue. The package also includes sanctions on individuals and entities involved in military technology and the abduction of Ukrainian children. EU sanctions are expected to have significant effects on Russia's wartime economy. Analysts anticipate that phased LNG import ban will reduce Russia's energy revenue, which constitutes a substantial portion to its budget. Combined with previous sanctions, these measures are projected to exacerbate existing economic challenges, including high inflation and growing budget deficit. The restrictions on Russian banks and financial institutions are likely to further isolate Russia from financial markets, limiting its access to capital and borrowing costs. The sanctions on cryptocurrency platforms and vessels involved in sanctions evasion are intended to disrupt alternative channels Russia may use to avoid restrictions. The EU sanctions package has garnered support from various actors. Ukrainian President Vladimir Zelensky has expressed strong approval, emphasizing the importance of continued international pressure on Russia to halt its aggression. European leaders have reiterated their commitment to maintaining sanctions until Russia ceases its military operation in Ukraine. In contrast, Russia has condemned the sanctions as unlawful and politically motivated. Putin acknowledged that measures may cause some losses to the Russian economy, but reiterated that Russia will not surrender to external pressure. The EU's 19th sanctions package represents a significant escalation in economic pressure on Russia. While the full impact of these measures will unfold over time, they are expected to further strain Russia's economy and its ability to sustain military operations in Ukraine. That's all for today. Subscribe to our YouTube channel and glory to Ukraine.